You can see the market is deciding what to do with yesterday's low. We traded above yesterday's high and then below yesterday's low. That's a sign of strength on the part of the bears, but the bears want to close below yesterday's low, not just trade below yesterday's low. And that's what we'll find out over the next few minutes, whether or not the bears will get that little sign of strength. I think the single most important chart is the monthly chart. I know you can't see it well with all these lines. Well, we've had 7 consecutive bull trend bars, and this is the open of the month. So if tomorrow closes above that line, then that would be 8 consecutive bull trend bars, and the E-mini has never done that. And every time it's had 7, it's had a 100-point correction or so within a month or two. So even if we do close below the line and stop at 7, I still think the odds are we'll get a 100-point correction in the next month or two. Tomorrow's a Friday, so weekly support and resistance is important, but it looks like the only price on the weekly chart that will be important is the open of the week. And so far it's a doji inside week, so I think the monthly chart is more important. Two-day rally, bull channel, bear flag. So the odds were we'd get a bear breakout today. We ended up getting a lower high major trend reversal, and then you can call it a wedge. I call it a final flag. There's a wedge final flag here, but the whole bear channel you can call it wedge. We tried to get a higher low major trend reversal. Now we're trying to get a double bottom higher low. I didn't check. Something I usually check during outside days is symmetry. Okay, that's the size of the breakout above yesterday's high. The breakouts tend to be symmetrical. And this is the size of the breakout below yesterday's low. Not identical, but similar. Excuse me. So yesterday we had a buy climax, so we know today was probably not going to be a really strong bull trend day. 50% chance you get some follow through buying in the first couple of hours, and twice we tried to do it and failed both times. And 75% chance you're going to get at least a couple hours of sideways to down trading, usually starting by the end of the second hour. And first part of the day, a bear doji bar, probably sellers above, buyers below. We're the bottom half of a 2-hour trading range, so it looks like a limit order open. A bull IOI bar 3, but basically 3 dojis, so probably more limit order trading. Buyers below, sellers above. Same with bar 4. We had a bull breakout on 7, trying to get a bull breakout above yesterday's wedge top. 50-50 chance you'll get a successful breakout and a swing up. 50-50 chance the breakout will fail and reverse down, and that's what it did on 8. I thought 8 would flip to always in short. Excuse me. And if you put your stop above 8, you stayed in, and you did not get stopped out on 10, 11. I think most traders, though, maybe they get out on the reversal up on 10. To me, I'm not bullish until it gets above 8, which it did not. We've had a few days like this where you have a strong sell-off and then a strong rally, but it does not get above the top of the bar, a little bit like that here. And then last week we had a similar deal. It was a couple of weeks ago. Over here, reversed up, could not get above. Here, we reversed up, we did get above. But anyway, not a high probability sell below 11. And then 4 bars down, 12, 14. I started mentioning around 16 and 17 that we're getting too many bars down, and therefore a reversal up like 19 will fail. Bear breakout 21.22, tail 22, testing yesterday's high. Not a very good buy 23, but a parabolic wedge 16, 19 might go up for a couple of legs, which we did. And then the bears got a couple legs up for a bear flag here. You can call it a wedge bear flag, 1, 2, 3. You can call it a low 2, where there's a double top here, and I just missed 36. I did not sell it, and I ended up having to sell lower, and then we had to sell the close all the way down. Even 43 is sell the close. I thought there'd be buyers below. 42 sell the close. I thought there were going to be buyers below. The sell climax is just too huge. Sometimes when the market crashes or has a mini crash, it can just sell off all day. That's very rare, maybe once a year. And you get this about 20 times a year. And what happens is the stop is now so far away that the bears have to take profits. So they start taking profits, and you get a 5 or 10 bar correction, which took place here. And because of that, bulls are starting to buy below 42. Above 44, I thought it would be okay, but I thought that we would probably be sideways, maybe a bull channel, for 5 or 10 bars. And then we got the IOI here for the short, and down here we have a wedge late in a bear trend, about the same distance below yesterday's low as we were above yesterday's high. So I think we're going up. But to buy with a limit order, you need a wide stop, and you have to be willing to scale in. Micro double bottom, 54, 55, 55 closing on its high, 56 closing on its high. Looks like we're back to always in long. And it was by the close all the way up. 61, a doji inside bar. Why are we getting a high one buy after a buy climax at resistance? That's usually a bad combination. It's like selling below 42. You can make money, but it's probably not going to go down very far. Here you can make money, probably not going to go up very far. And then a bear IOI, it fell further than I thought it would fall. I did not think it would fall as sharply as it did, but it did. So 66, 67, back to always in short. 72, always in long. Bears have to sell again, 76. But at this point, it's probably just going to be sideways into the close. For stop entries today, you could buy above 3, low probability. And these are all low probability, even selling below 11, low probability. And even on the way down here, all low probability. 23, parabolic wedge. I thought, we may get one more small push down after the 21 or 22 breakout, but I thought probably not much down. The sell-off looks like a bear leg in the trading range. So we're probably not going to go all that far. Next stop entry buy was maybe 31, not strong, tight trading range, but probably a second leg up from this. And then from up here, 35, low probability buy. We're still a lower high. Excuse me, so I don't want to be buying too high in the trading range. And then 36, it fell much further than I thought it would, but it was a reasonable swing, stop entry short. 44, I thought a scalp buy. 45, I just thought that was a setup. It was kind of a nasty thing that the market did. Double top 42, great looking bear bar. I think there are buyers below, and I think we're always in long, so I would not sell below 45. And then the opposite true, 47, outside up, making you think that the market's strong. But look at all the reversals in the prior 6 or 7 bars. It's a tight trading range. And then 50, if you sell it, you got to be ready for a reversal up, because this wedge after a sell climax is probably going to be the final bear flag. Above 55, okay, buy. And then up here, you got to be really careful. 61, I thought there'd be sellers somewhere up in here. 65, probably going to enter a trading range, but we may correct all the way down to yesterday's low and a 50% pullback, which we did. 68, I would not buy it, but I think it was okay to buy if you put a stop below the low of the day. 72, I was concerned that whenever you have an exceptionally big buy signal bar forcing you to buy high in a developing range and high in a tight trading range, there are going to be sellers above. So if you buy 72, you got to be prepared for a deep pullback. I think you get out below 76, and aggressive bears would sell there. I would not. Buy the close, sell the close. There were several close calls. 7 and 10 were almost by the close. 8 I thought was sell to close 8, 9, but I was not expecting 10 to race up so quickly. Then in here, 4 bars down, 12, I thought sellers above, probably sell to close, but I did not think we would go down as far as we did. But it's all sell to close here. 19 disappointed bears, so they probably get out on 20. That's why you had that tail on 20. Back to sell to close 21, 22, and then disappointment 23. And you can see the bears bought back their shorts on 24. It dipped a little below the 22 close, and they bought it. I thought 24, 25 buy the close for a couple legs up, but I did not think we were going to go very far up. 32, I said that I thought limit order bears 26 high would make money, and that the follow through 33 would be disappointing because I think this is a bull leg in a trading range. And then sell the close, maybe 37, but definitely 38, 39, 40, 41, 42 sell the close as well. And then here, it depends on how aggressive you are. I think there's a big risk that this is going to be the final flag, and we're going to get a sharp reversal. So if you sell 52, 53, you got to be ready. On the way up, I thought we were always in long on 54, but 55, 56, 57, maybe buy the close. Buy the close all the way up here, getting close to the moving average. 60 would be the last one that I would consider. Then I'm starting to look to sell above bars. On the way down, this 66, good enough sell the close. I think we're not going to go all that far. What about buy the close 72, 73? I think we're in a trading range. We're not going to go all that far. Limit orders, it was all limit orders at the start of the day. They sold above 1, they sold above 3, they bought below, they probably sold above 2 as well, and above yesterday's high. And then through here, I thought sellers above 9, but I thought we could get all the way up to the 8 highs, so if you sold that, your stop is up here. 12, an easier limit order trade, you get 4 bars down, so that would be a sell. And then 17, we have 7 or 8 bars without a bull body, that's a sell. Probably buyers below 10, buyers below the day, buyers below 73. But I'm more interested in selling through here. And then here, buyers below 27, probably buyers below 30. Up here, it's a bull flag, but we're also a lower high, and we've also had a fairly weak rally, bad follow through. So probably sellers above 36, sellers above 33. But with a decent bull bar 35, okay not to take it. And then down here, probably buyers below 42, buyers below 45. Maybe sellers up here, right? It's possible we reverse up sharply, so I personally would not place a limit order to sell the 44 high. If anything, I would buy that. And then up here, that outside up 47, why are the bulls not creating really good setups? If this is going higher, why are the bulls not creating setups that would make a lot of traders confident in buying higher? So I thought it was either going to be a bull channel, bear flag, or a trading range. So probably sellers above, certainly sellers above 48. And then on the way down, I thought this was going to be the final flag. Bull scalpers made money buying the 46 low. I thought I had a high confidence that there would be buyers below 43 low of the day. On the way up here, probably buyers below 62, but probably not much more up because we're stalling right below resistance. So we're probably going to have a hard time getting above that resistance. And then here, bull bar, tail, 3 big bear bars, probably sellers above and then sideways into the close, which we were. So we're in the middle of the resistance September open and support August low, and the market will decide if either will be important on the monthly chart when the monthly chart closes